Today, in this video, we'll dive deep into a variety of essential topics that every crypto enthusiast must know. We'll start by discussing how to select the right crypto tokens for your portfolio. This involves understanding market trends, evaluating token utility, and assessing the team behind each project. Next, we'll explore diversification techniques to help you spread your investments across different token projects, minimizing risk and maximizing potential returns. Whether you're a seasoned investor with years of experience or someone who is completely new to the crypto space, this video is designed to equip you with the knowledge and tools you need to enhance your retirement strategy. We'll provide practical tips and insights that can help you make informed decisions, where curiosity evolves into knowledge right here on the Crypto for Seniors channel. Now, nothing contained in this video is financial advice. This video is for education only and is not intended to suggest you invest into crypto at all. Being better educated is at the core of our channel. If you should choose to invest, then please work with a licensed financial advisor. With the rise of digital currencies, more folks are looking to diversify their investment strategies to secure a better future. Traditional investing would be grab a few choice stocks and work until you retire. Nowadays, it is all about diversification. Having a mix of stocks, the right type of 401k, annuities, crypto, and life insurance products to blend what is right for your individual future. The major key here that no financial advisor can argue with is diversify. So, let's break down what this all means and why it's worth considering. Now let's talk about the challenges people face with traditional retirement savings methods. These methods have been around for decades and they do work. While they have their merits, they also come with significant drawbacks that can't be ignored. Many of us are familiar with the standard 401k or IRA, which are the go-to options for most people planning their retirement. These accounts offer tax advantages and are relatively easy to set up, making them popular choices. But let's be real. Those options often come with low returns that struggle to keep pace with inflation. Over time, the value of your money can erode, leaving you with less purchasing power. We're talking about money that just sits there, not growing as fast as we need it to. This stagnation can be particularly frustrating when you're trying to build a nest egg for your golden years. The slow growth can make it difficult to meet your retirement goals, especially when you factor in the rising cost of living. With prices rising, the purchasing power of our savings can diminish quickly. Everyday expenses like groceries, healthcare, and housing can become more challenging to afford, putting a strain on your retirement budget, leaving us feeling uncertain about our financial future. This uncertainty can lead to stress and anxiety, making it hard to enjoy your retirement years. This is where the need for alternative options comes into play. Diversifying your investment portfolio can help mitigate some of these risks and provide more robust growth opportunities. And that's where crypto enters the scene. Cryptocurrencies offer a new and exciting way to invest, with the potential for high returns. While they come with their own set of risks, they also provide an opportunity to diversify and potentially grow your retirement savings more effectively. So, what are the options when it comes to cryptocurrencies that could fit into your retirement plan? Now, we are not sponsored by this company. They are one I personally use to help increase my IRA growth. iTrust Capital offers its investors a place to invest your retirement dollars into crypto, thus further diversifying my portfolio. I typically have 15% of my holdings in this type of IRA. However, this was a part-time job I had and am using it to learn about this option. Second, picture Bitcoin, Caspa, and even newer coins like Solana, Hedera, or Tron are all potential players in the game. These digital assets have been gaining traction over the years, and many investors are considering them as part of their long-term financial strategy. You may want to consider holding some Tron to pay fees like you do with Ethereum. When you buy or sell some tokens, you need to cover this with what is called gas fees. Typically, Ethereum was the one token to pay for most of these gas fees. Now, Tron is a new player in the gas fee market that is much less expensive over the fees of Ethereum. Each of these cryptocurrencies has unique benefits and risks. Bitcoin, for instance, has a limited supply, which some argue makes it a good hedge against inflation. You need to know which tokens can simply mint more of the token and which have a specific number. Use this information to make informed decisions when buying or selling tokens. Bitcoin is often seen as a store of value by the fact of its limited supply. Just like we were on the gold standard, well, Bitcoin is adopted around the world as the store of wealth and stability. Many countries have seen their currency devalue to simply paper, not worth anything. These areas have adopted Bitcoin as the new currency to pay for everything, like utilities to food or gas for their vehicles. Now Ethereum offers possibilities with its smart contract capabilities. These smart contracts can automate and secure transactions, making Ethereum a versatile platform for various applications. However, it's crucial to do your homework because the market is volatile. Prices can swing dramatically in a short period, and this can be both an opportunity and a risk. You want to make sure you're investing wisely and not just jumping on the latest trend or putting money in on your friend's latest tip. Consulting with a financial advisor who understands the crypto market can be invaluable. It's all about finding a balance and knowing how to safely invest in these assets. Diversifying your portfolio with a mix of traditional and digital assets can help mitigate risks and enhance potential returns. Remember, the key is to stay informed and make decisions based on thorough research and sound financial principles. Now here's the kicker. Many investors have seen significant returns by putting their money into cryptocurrencies compared to traditional methods. Reports from the past year show that Bitcoin has outperformed most stock indices, and there are countless success stories of people who have turned modest investments into substantial savings. So, if you're looking for higher returns and are willing to navigate the risks, crypto could be a viable option for your retirement portfolio. Just remember, with great potential comes great responsibility. To wrap things up, we've covered the exciting potential of using cryptocurrency for your retirement savings. We've talked about the challenges of traditional methods, explored some promising cryptocurrencies, and highlighted the potential for higher returns. But as always, it's super important to research thoroughly and approach your investments with caution. In an upcoming video, I will select one crypto project and evaluate it as I have been talking about in this video. We'll go through the project, the professionals, and their work with other tokens, check their roadmap, and ensure they are keeping to their schedule, their utility, or value of a project. And finally, my opinion or the project, and if I would invest into it. Remember, this is about my journey into the world of crypto as a senior. These videos are about how I got into this world of crypto and are not intended to offer you any advice. All right, let's hear from you. What do you think about using crypto for retirement savings? Drop your thoughts in the comments below. If you enjoyed this video, here is one you may enjoy just as much. If you have a suggestion of a topic you would like to have covered, please also put that in the comments below. Thanks for watching, and I will catch you in the next video.